Symbotic stock investors got great news on October 10 when the company announced an expansion of its relationship with Walmart that sent the stock price higher by nearly 20% following the announcement. So in this video, I'm going to review that announcement, go over the details, and discuss a little bit more about what this could mean for Symbotic stock investors. Of course, I was happy about this announcement and the stock price increase. I've had Symbotic stock rated as a buy, and I did a video earlier in October recommending Symbotic as one of the best AI stocks to buy or robotic stocks to buy, and suggesting that it was significantly undervalued. So let's take a closer look at this interesting company.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in the announcement, Symbotic said that today it announced it has entered into commercial agreements with Walmart de Mexico to implement Symbotic's industry-leading warehouse automation systems in 2 of the retailer's locations near Mexico City. Symbotic will deploy its end-to-end systems at 2 greenfield distribution centers, and the Bajío site, and I'm pretty sure I pronounced that wrong, will be one of the largest in Walmart's distribution network in Mexico, and marks the largest system that Symbotic has deployed as a single project. So this is really interesting on several fronts. Number one, of course, locking in this deal for 2 new locations is a great deal for Symbotic, but also it's great for another reason, in that it's expanding its relationship with Walmart. It already had a relationship with Walmart, and I love to see companies expand relationships, especially in a small, large deal like this one, where Symbotic is the small company, Walmart is the large company, and you already have a deal with the large company, and that large company expands the deal with you. That demonstrates that you've passed the test. You've hit a milestone, you've met guidelines, and you've met requirements of that large company, and that large company now trusts you a little bit more and has given you more revenue, more contracts, more business. And that's always great to see, especially for the smaller company, because now you can make the inference that Symbotic services are pretty good. They deliver pretty good value for the price that they're charging, and enough so that Walmart is expanding the deal with them. Now, Symbotic, if you look at the profit loss statement, they're losing money on the bottom line. But if you look at the cash flow statement, they're cash flow positive. So with the current pricing, they're cash flow positive. And this expansion is going to help that. It's also going to help facilitate newer contracts, because other retailers and other businesses are looking at this and saying, Walmart is not a foolish company. If Walmart is expanding this relationship with Symbotic, there's something to the value that this company is providing. So let's call them in. Let's see if they can help us with our systems. And so that's why it's great news on several fronts, not just on the actual sales and profit it will add to the company's bottom line. So the management says that they are pleased to welcome Walmex as a customer and to implementing the state-of-the-art automation within its Mexican network that will enhance productivity in both distribution centers and stores. Symbotic's robotic case picking systems play a strategic role in support of the retailer's goal of modernizing its vast supply chain network. And that's true when you're a company as large as Walmart. Operating those facilities becomes a greater and greater challenge. Operating all of those people, sometimes you forget, Walmart employs roughly 2 million people. Managing those people is also a difficult business task. And so if you can convert some of your systems to automated systems, you decrease the challenge of managing all of those people, especially at a time when labor shortages are present, especially in a time when wages are increasing. And so this is an opportune moment for Walmart to lean into this category, lean into automation. It'll allow the business better scale, and it'll allow the business less constraints. One of the reasons why Walmart is constrained on growing is because of the people it needs for that growth. It's an labor intensive business, as I shared with you, 2 million people already. So with each incremental advancement, with each incremental new logistics center or each incremental new store that Walmart adds, it needs to add a lot of people to support that store or to support that facility. And so if you're shifting a little bit of that to automation, that helps reduce the constraints on a company as large as Walmart. That's why they've entered into this relationship with Symbotic, and they're working together to increase how much Symbotic can help Walmart. I mentioned that Symbotic is losing money on the bottom line, but those losses are improving, and that's partly why I recommended the stock as a buy earlier this year, and I reiterated that recommendation a couple of weeks ago. In the 9 months that ended June 29th, Symbotic's revenue jumped to 1.284 billion, and its operating loss improved to 95 million. Previously, in the 9 months ended June 24th, 2023, the company lost 169 million in operating losses. Those losses improved to 95 million. I've often said I don't mind investing in companies or recommending companies that are losing money on the bottom line if they demonstrate progress towards profitability and I can see a clear path of how the company can become profitable. Symbotic is one of those companies that has demonstrated that progress, and I do see a path for Symbotic to eventually be profitable on the bottom line. Now, there's a couple of areas of concern for Symbotic and Symbotic investors that brought the stock price down, and I saw that as an opportunity, and one of the reasons was shareholder dilution. Symbotic's shares outstanding jumped by over 50% to 93 million. That was up from 60 million in the same 9-month period last year. And when companies are diluting shareholders, if or when they eventually become profitable, the earnings per share will be lower because there will be more shares outstanding, more shares that you have to split the profit among. That being said, shareholder dilution for me is more of a concern with companies that are negative cash flow from operations, and Symbotic is not in that position. It's delivered cash flow from operations in several consecutive quarters and in both 9-month periods. In the 9 months that ended June 29th, the company's cash flow from operations was positive, 41.3 million, but it was down significantly from the 186 million it generated in the same 9-month period last year. But you'll see the biggest differentiator is in deferred revenue, where in the 9-month period last year, it had 349 million of deferred revenue. In this 9-month period, it only had 9 million. And so this is a bad sign typically, but it's very lumpy. It's how a company recognizes contracts signed that it has not yet delivered on. So for instance, this announcement that we talked about in this video where it contracted with Walmart to deploy its solutions in those 2 facilities, there's likely a cash deposit that Walmart gave Symbotic for this deal. And so that cash that Symbotic takes, or that revenue that it's expected to generate when it starts deploying that service, it has to recognize as deferred revenue. It can't recognize that as revenue just yet. So this deal that it just signed with Walmart, it cannot recognize it as revenue until it actually performs whatever it was that they signed for the services, right? So if that performance is not going to start until 6 months later, then Symbotic can't recognize that as revenue until 6 months later. It can take the cash and record it as deferred revenue, and then when it starts performing that service, it can start recognizing it as revenue. And so when you see this number decline, it's troubling because it shows that maybe the company's not signing as many deals as it signed in the same time last year, and that's a little bit concerning in terms of forecasting demand for a company's products. But overall, Symbotic has such a backlog of orders and its product is highly demanded. So I was not as concerned about this as most investors were, although it was definitely not a good thing to see. But the stock price fell significantly in response to this news. So all in all, the news we got today with Symbotic and Walmart was great news for Symbotic stock investors. And those of you that own Symbotic stock, congratulations on your gains. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.